Hey guys, Mike here. So, everybody's heard about these stock splits coming out of the woodworks, from Google to Amazon to Tesla to now Shopify. And then watch out for NVIDIA, because I think they just got approval to double their shares from 4 billion to 8 billion. You normally only do that for a couple of different reasons. One of them is a stock split. So we'll see if they're going to join this, what seems to be a growing party of stock splits. And, everybody knows these companies, okay? A lot of people probably don't know the ins and outs of these companies, because why research them if you're not going to pay $3,000 a share for Amazon or $2,000 a share for Google? I mean, why even know, right? I think we all use their products for sure. But today what I want to talk about is, we'll cover some basics of the companies and why, when these stocks split, why they go up. It's going to be for at least one of three reasons, actually. And, more importantly, though, how can you generate income off of it? Not just the gains, but actually why you own the stock. And so, full disclosure, my goal this year for sure is, I want 100 shares of Amazon, 100 shares of Google, and 100 shares of Tesla, and by year end. And so, that's my goal, to put those in folio. And it's really for not just the gains, it's for the other reason I'm going to talk about today. And so, if you get anything out of it, hit the like, subscribe button. I really appreciate it. And we're just going to go, straight into this. And, I got this in my inbox today from Daily Upside. And, if you scroll down, it's talking about how Shopify just threw their hat in the ring for a stock split, right? And for those who don't know, S&P 500 companies that announced splits since 1980 have on average performed 16% better than the index in the following 12 months, according to Bank of America Securities. And this is absolutely true. As you look over here, here's another data for you. And you can see within 3 months, it's 3 times better than the index. 6 months, 3 times better. And then 12 months, it's up 25.4% compared to 9.1% for the index. And for those interested in getting the Daily Upside, it's completely free. It's a newsletter that comes in my inbox pretty much every day. All you got to do, click the link down below, put your email in, hit sign up. That is it, okay? And you get news about the U.S. market, global markets. You get investment ideas just like this right here that I'm showing you. And so go ahead and hit that link down below and sign up for that. Doesn't cost you a penny. And so, of course, why is that? Why do the stocks run up the split? And, really, because it's simple. Most stocks that split have just become unaffordable, especially for retail investors, right? That's really what they're targeting, trying to get more people in. And there's more retail investors now than there ever has been in the market. And so, you go from 3,000 to they're trying to do a 20-for-1 on Amazon. So they're going to be anywhere from 150 to 200 or something. People are going to, buy in. It'll be a huge flood into those stocks. And what happens is a lot of people buy before. Some traders buy before, because I've showed a video on this a while back, where they'll just buy in, and because they know it's going to run up to the stock split day, and usually then it kind of tanks, and they'll just sell off before that happens, before the stock splits, because they're not in it for the stock. They just want to trade. And, some of them do run up afterwards, right after the stock splits. Most time it kind of does a nosedive for at least a week and then takes back off. And so you have all kinds of people start buying into these stocks, but they're going to bring in a whole new flood of people. Because think about it. I mean, yourself, if you're out there, if you got in the market after 2016, you were going to be paying $500 for Google, $600 for Amazon, and so most people aren't going to buy that. And they just ran up now to where they're between $2,000 and $3,000. I mean, who's buying that? It's just, most people just aren't going to do that. And so, Tesla's ran up multiple times, right? And that's why they keep splitting their stock. And so, that's a big reason why I think you've seen these runs on these stocks, but you'll continue to see that because people really want to get on there, because one, they're stabilizers for your portfolio. They don't drop 80%, right? Some stocks do, and I'm going to show you the very base of these companies, and let you know why they're going to continue to run up after the splits. And there'll be your ups and downs, yes. But, one big reason is people want to own companies like this. Look at how much they make up of the U.S. stock market. I mean, Tesla's sitting there almost 2%. Alphabet, Google, that is 4.4%. Amazon making up 3.4% of the S&P, okay? And, if those who don't know anything about Amazon, it's simple. I mean, there's no point. Everything they make and all that stuff. But, what's crazy about this company is how they continue to grow like they do, even after all these years. This is from 1997 to 2021, the net sales. Look at that. That is insane growth, $469 billion. And then you look at this right here, when it comes to their net income, $33.4 billion in net income. And that was last year, by the way, okay? And of course, what do we know Amazon for? Amazon Prime is a big one, right? Their web services, cloud, that kind of stuff. But they have like 41 other subsidiaries. They just bought MGM Studios, for crying out loud. And so, that's the thing about Amazon and why they continue to grow, and their stock will continue to go up, because guess what they're going to do? They have a $10 billion stock repurchase program. So $10 billion just sitting there. If the stock starts to falter or they start to falter, they just start buying back the shares, right? Less shares out there, I mean, the stock goes up. And so that's another thing to think about as well on top of that. And so, and then Google, I mean, everybody knows Google. And again, you can see the revenue growth from 2002 to 2021. I mean, it is extremely impressive. And they're the closest thing you'll come to a monopoly. I mean, they own such a massive percentage of the web. I mean, and there's no other search engine ever going to eclipse them. I can't be shocked if it ever happened. But, and then you look at the cash these two companies hold. Amazon sitting at $90 billion, and there's Google $170 billion in cash and investments sitting on their balance sheets. And then, of course, the king of EV, I mean, Tesla, we don't really talk about them too much, but for those who just happen to not know or who want to know, you can see the growth over time and then the projected revenues for 2022 and 2023. More importantly, the margins. That's what really started getting this stock going in 2019 when they finally started increasing their margins. You see that nice increase going from 2019 to the date. And as a side note on Amazon, I'm actually waiting until after they report earnings for the first quarter, because in the fourth quarter, they reported, and they obviously included their investment in Rivian. And of course, Rivian was over $100 a share at that point in time. Well, it's been cut in half. And so that can have, an interesting effect, because they use mark-to-market accounting when they reported that. So it accounted for like 82% of their GAAP profits or something like that. And then of course, all their other investments, which count about $20 billion, most likely have gone down as well. And plus, with consumer sentiment being in the toilet, if other people are doing what me and my wife have done, where we literally have a column on our budget just for Amazon purchases, because we tend to like to use Amazon because it's so convenient, and we have slashed ours to the bone. So if other people are doing that, you never know what the first quarter is going to hold. And so another thing I want to do real quick is go in and say, if you've never owned these companies, like what kind of returns, because they're so big, right? What kind of returns do they give on a yearly basis? And I went back and found 2 years I want to, use, because I don't want to use 2020 and 2021, because that's when the government was giving us all this money, putting like 10 trillion in stimulus out there. So I want to go pre that. And as you can see in 2017 with the 4 rate hikes, ended up Tesla goes up to 62%, Amazon 62%, and Google's around 38%. And then if we go over to 2019, where they were lowering interest rates, they stopped rolling off the balance sheet, right? Tesla, whatever happened, took a dump. But you can see how fast it recovered. Ends up 45%, Amazon's around 40%, and Google's around 39% there in 2019. So two totally different situations in those years. And so, the other thing is, which what I talked about now, this is the big one, right? And I'm going to get into a little of this. So the other one is, the reason why I want 100 shares specifically is something that one of our members got us into last year. Dave, he's been a member of the channel for a long time, and he sells a lot of call options and puts and all that stuff. I knew you could buy them, but I didn't know anything about selling them. And he got me into it, and I started doing research and everything. And so, that was one of those things that, it's like an extra side hustle, in full disclosure. I think I started last August. I'm extremely conservative in how I do it. And, I think I made like $4,000 extra from August to the end of the year just doing that. And with these stocks in particular, because I know they're going to run back up, what I'm looking for with these stocks is not what I'm going to get for them now by doing this. It's what I'm going to get later on down the road as they continue to appreciate in price, okay? And just show you what I'm talking about, like Tesla is the one that I literally know people that pay off their mortgage every month doing this, pay off their cars, every car payments, you name it. Some of them go on vacations doing this, and it's absolutely insane. But, they sell covered calls. You need 100 shares to do that, right? And so I'm simply going to go over the basics here with you guys, what I'm talking about here. This is Tesla, right? It's one of the best premiums you can get out there on a covered call contract. You have to have 100 shares to do this. Is why I'm targeting 100 shares for all 3 of these. And, if you're looking at This right here to the right, you see those numbers, there's 2838 right there. That's the premium. You have to add 2 zeros to that number. That's actually $2,838 because, again, you have to have 100 shares. That makes one contract, okay? And you're selling the right for somebody to buy your shares at a certain price if it hits it or above that. Okay, either way, you get to keep the premium. No matter what happens, you get to keep that. But the goal is not to lose your shares, especially Tesla shares. And so, you know, if you look at this, we just scroll up. So what I do is extremely conservative, right? I want to look for a delta like 10% or something. And so if we go on up here, you'll see like this one right here is 510, I believe it is. And so, you know, very low probability that this is going to happen in 10 days. That Tesla's going to get to $1,170 right there. And so something like that's what I'm looking for. You can go way above that as well. I mean, but this is what I'm looking for the future. When it gets down to whatever the stock split is price, 250, 300, you know, that's not going to be the premium. It's going to be much less than that, but it'll still be decent. I mean, and that's why I pulled up NVIDIA for you. It's another popular stock. You know, here you can see if we just scroll on up, I mean, obviously, if you're aggressive, that's what you can try to get. I would never do that, me personally, because that's just not, you know, what I want to do. It's not my risk profile there. But if I scroll up to where it's a low key, you know, a very low probability of happening, you can see right there, it's that one right there. And, you know, it's $121 you would get, no matter what, you get it right then. And when this expires worthless, which is what your goal is, you get to keep the $120 or whatever the price is, premium is going that day for. And so that's why for me, I just imagine myself doing this with 4, 5, 6, 7, 8 stocks, you know, every week, every 2 weeks, which I did last year. And, you know, Tesla's the big one. The premiums are all different. Tesla is one of the big ones, right? And there's a few others out there. And so Google and Amazon aren't going to give you anywhere near the premiums that a Tesla is going to give you. Plus, they're not going to grow as fast. So, you know, maybe instead of purchasing, which I've thought about this, I'll have to look at the time, make a decision on whether or not I want to take the money I'm going to put in Amazon, just throw it in the Tesla on top of that. But it's just, you know, it's about risk profile and trying to spread things out and that kind of stuff, you know. So, but just thinking about that and understand, I'm not here to teach you how to sell covered calls, because how I did it was, you know, Dave, you know, put me onto it. I got 3 videos down in the description of what I learned from, and I watched many, many others, read a whole bunch of stuff because I like to know what the heck I'm doing before I do something. But I can promise you this, it ain't rocket science. I'm telling you right now, if I can learn it and do it, anybody can. So, you know, understand, make sure you hear what I'm saying. Teach yourself this stuff, learn from this, take a class, watch these guys. The videos I put down there, all they do is options, right? And one guy, all he does is like cover calls and cash secure puts, which I won't even talk about right now. But, you know, that's key. Make money on your stocks. It's like renting your, you know, how Elon Musk wants to have you be able to rent your Tesla out while you sleep or something. Well, that's what this is. It's passive income. You hit a couple buttons, right? And if you do it the right way, and you know your charts, and you know what you're doing, yes, you can literally just make a passive income on it. That's what you can do. For anybody who does covered calls and Tesla, you know, put in the comments what your experience has been. I wish I would have known about selling covered calls years ago. And this is one of those things my son will definitely know. He will absolutely know how to do this stuff. I will send him to classes if I have to make sure. And so, because you would almost build your portfolio even different too. You wouldn't be spreading your money out to all these different stocks. You would just do stocks. You could build it up to those 100, 200, 300, 400 shares and do this. And I'm telling you, it's just insane. So it sounds difficult. It is not, okay? And so, you know, hopefully you got something out of it. Don't forget, hit that link down below if you want to sign up for the Daily Upside. Again, completely free, guys. Fantastic stories and news updates for you guys. Again, cost you a penny, okay? Just put your email in, boom, you're good to go. Again, hope you got something out of it. Let me know in the comments, you know, are you getting in on these stock splits or not? And what do you think about selling covered calls, okay? So have a good one.